Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified, episode 34. Wow, 34 episodes. So what are we going to talk about? Well, I'm going to continue my discussion on what's standing between you and your longer term success, and that longer term was put in there because a lot of people had some initial success, and your initial success may or may not be a predictor of longer term success. And we're going to talk a lot about that in just a few minutes. And we're going to talk a lot about trading psychology and getting your mindset right and learning how to think about markets. And that'll make a lot more sense in a few minutes. We'll follow up quickly on the mystery chart. And by the way, housekeeping, I do take requests, a little backed up in those requests, but please keep them coming. If I can't cover them today or in any of these shows, what I could do is cover them in my Thursday show, which is a little bit more free format. Dave Landry's The Weekend Charts, and you can find that link on Thursdays on my website. Or I could possibly cover them in a follow-up Q&A session, which is part of the members area, and I'll give you access to that so you can watch the show. So if you need to reach me, davelandry.com/contact. If you want the slides to this and to all other shows that I've done here for StockCharts.com, go to davelandry.com/StockCharts. And in addition to all the slides, which includes my setups and money management and all the things I discuss here, remember, everything is fully disclosed that I discuss. But in addition to that, you'll also get an introductory course to trading and a market timing course. And the market timing course, FYI, has been broken, meaning that you weren't able to access it, but that has since been fixed. So if you tried to access it in the past, please try again if you don't mind. Bear market updates. I changed the word bear to bull in my newsletter last week, and that was right before the market tanked pretty hard. So we'll just have to see how it all shakes out. But I have been doing a lot of updates on my website, so check the homepage at davelandry.com and check those bear market updates. So let's take a look at the mystery chart real quick. This was left over from last week. It has not triggered yet. This stock has bottomed out nicely. This is actually a recommendation for today. I do have orders working for this particular stock. Nice cup type of bottom here. And notice it's worked its way off of lows. Not really a setup then, but then it began to accelerate higher and then has since pulled back. And if you back up to one of the earlier shows, you'll see that as a TKO, trend knockout, and also a pullback type of pattern. So we'll continue to watch this one to see what happens. If you want to see all the other mystery charts, in addition to going back in and watching my prior shows here for StockCharts.com, you can go to davelandry.com/archives, and it'll bring you this page. You can click on those individual days, and those are the stocks that I recommended for the day, and you can see how they fared, warts and all. Now, let's continue the discussion of the markets and you, and continue to peel that onion on trading psychology. Now, I have a lot of random thoughts and recap this week. My wife often says, when she looks at my column, you say a lot of the same stuff over and over. And when she first said that, I was a little offended until I got back to my office and checked my inbox. And a lot of the things I preach, like trading with the trend, and using money management and embracing your emotions and all these other things were completely thrown out the window based on the emails I'm receiving. So I'm going to keep saying a lot of the same things until you people get it. Now, as I've been saying quite a bit, because you don't know what you don't know, the question is, do you want to be a trader for now, or do you want to be a trader for life? Last couple of shows, I talked about the fact that if you're newer to trading, God bless you, and we'd love to have you, but just get educated and take this as serious as any other career, and realize there's a lot of things that you don't know, and you don't know what you don't know. Now, because you don't know what you don't know, you need to always ask, what does the other guy know? Whenever I buy a stock, I might think, or usually think, otherwise I wouldn't buy it, I think it's the greatest stock in Stocktown. I think it's the greatest stock in the world. But there's a little voice in the back of my head saying, you know, Dave, what does the guy that's selling you this stock know? What does he know that you don't know? And there's a lot of things out there that you don't know. Linda Rasky in Trading Sardines, a book I would recommend you read, says take a cookie when they pass the tray around. And what she meant by that was when retail traders are taking certain action, you could pick them off. And that was her point, is that don't look a gift horse in the mouth when the retail traders come in. Go in and take that cookie when the tray gets passed around. Now, along a similar vein, about 20-something years ago, I was in a seminar and a woman was talking about trading S&P futures. And she showed her system and how she did it and what she looks for. And she went on to say that if there was none of her patterns setting up, she would pick off the one-lotters. And everybody kind of nervously chuckled because most of the audience was filled with a lot of one-lotters, meaning small traders who are only trading one contract. And this was way before the E-mini, so even one contract was very significant. Anyway, she kind of looked at us and she said, well, I love those guys, meaning that she can make a lot of money off of those naive retail traders. Now, along the lines of you don't know what you don't know, I've been talking about a few things lately, and just real quick, for the record, I would never be Schadenfreude because, believe me, I get my butt handed to me quite often, and anybody who's cocky in this business is either delusional or lying, because we all get our butt handed to us on occasion. Now, the point I'm trying to make is that it's just that there will be some really hard lessons to be learned, and you need to brace for them. And I think the worst thing can happen to a newer trader is to have some initial success and then things hit the skids. And the longer that success lasts, the more it's going to hurt when things, not if things, but when things hit the skids. Now, one of the persons in my Facebook group said, party over for Robinhood, and posted this little meme. I drive my kids nuts because I call them memes. Anyway, before I digress, his point is that with the market crashing last week a little bit, if you want to call it a crash, a little sell-off, that a lot of these Robinhood guys aren't using stops in proper money management. So if you are one of these phone traders, make sure you learn a little bit about stops and money management. And then I would also pay attention. Not that I'm the grand poobah, but pay attention to what I'm saying today. There's a lot of things I think will help. Now, another one of those Exhibit A's or Exhibit A is that Hertz is dumping stock onto the Robinhood traders. I was reading the Kirk report on Sunday. Charlie Kirk, good friend of mine, he invited me down to St. Lucia for a traders retreat to be the guest of honor, and it was a wonderful experience. If you don't know Charlie Kirk, check him out. Good guy. Anyway, as part of his Kirk report, he had a link to this article, which is basically saying this company is trying to take advantage of these Robinhood traders. And the point I'm trying to make is professionals will take advantage of the little guy unless you're willing to learn how to trade properly. Then you'll be on the same side in general as the professionals. Now, I talked about a phone trader who's an acquaintance of mine. He talked about making 30% in a month, and he wanted to know if that's good, bad, or normal. And then I explained last couple of weeks that that's pretty darn good, because if you did that every month, even with our pretty small accounts, the compounding would have you at about $52 billion in just a few years. And unfortunately, this post was put up. He's also a member of the Facebook group. He says, I'm in the same boat. I've lost all my earnings and I'm back to where I started. Well, that's okay. Just learn from the experience. Learn how to pick stocks better, okay? Ideally ones that are trending. Learn a little bit of money management so you can take some partial profits when they begin to rally. And other things that I preach here, learn a little bit about yourself. And we'll get deeper into that in upcoming episodes. There was a person I met recently, or not that recently, I should say, but a little while ago. And he bought a bunch of weed stocks off his phone because I guess he liked weed. And he did really well for a while. His stocks were going straight up, but unfortunately, he wrote them all down to nearly zero, and that was one of those hard lessons. So, if you're very new to trading, I'm glad to have you here. Just go in with eyes wide open. I'd much rather have somebody with a great attitude, as I'll preach over and over again, than somebody who's really smart. Because if you're really smart, you might try to outsmart the market. Speaking of really smart, a friend of mine's wife was visiting with her husband over the weekend, and she starts talking about Robinhood, and she said she bought airlines because she thought they were cheap. And then, of course, airlines imploded over the last week or so. And then she said, well, I'm in for the long haul, okay? And then she's in for the long haul, but the next day they bounce a little bit, and she's like, hey, I made money today. So which is it? Are you in for the long haul, or do you want to be a trader? I would recommend you be a trader, by the way, because there are no good long-term investments. And that's a topic that I cover quite often. Without digressing too far, just know that every asset class will lose 50% or more of its value at some point in your lifetime. I've seen the stock market lose half of its value twice. It lost 30% recently, as you know. I've seen gold half, cocoa, and many other markets. Now, let me just pose a hypothetical here, and what would the world be without hypothetical questions, as Mr. Stephen Wright once said. Now, hypothetically speaking, let's assume that she downloaded the app on this day here, on May 14th, the day that airlines bottomed, and then over the next few weeks, she watched them rally 80%. Now, the market has taught her that trading is easy and logical, and markets are not logical, and that's one point that I really want to drive home today. And let's say airlines begin to tank a little bit, and she's like, well, not to worry, I'm still up 50%. Is probably what she was thinking. One of the phone traders was up about 40%. He got whacked a little overnight, and he's like, well, I'm still up 30%. Well, now he's back to break even. So be careful with that reasoning, and there's much deeper issues at work here, and I hope as we peel the onion, we'll get further and further into them. But the bottom line is we all or at least want to be optimists. I mean, who wants to hang around with a pessimist, right? I mean, I was going to be a pessimist, but I figured it wouldn't work out. I think that's Stephen Wright once again. But unfortunately, you have to be a little bit more skeptical in the markets, and you have to focus on the money management, and you have to be willing to take profits. And then the bottom line is something else that I'd like to really get into in further shows, and upcoming shows, I should say, is your stock selection can be improved. And through improving your stock selection, it's sort of garbage in, garbage out, as I learned back in my early programming days. If you give a computer crappy instructions, it's going to generate crappy output. So if you can get better at your stock picking, then your money management will fall in place, and then your psychology, the way you feel, will be much, much better because you'll catch more and more winning trades. Now, as I've been saying quite a bit, your current success, or lack thereof, is a poor predictor of your future success or failure. And one thing that I've seen throughout my career in my educational business is those who fail at first but struggle through it tend to be the most successful traders, as opposed to those who do really well at first. And one example is a client that came in right before a bear market, and all he knew was shorting, because that's all I recommended during the bear market was short setups. And when I started recommending long setups, he didn't take them because he just was caught in this bearish mode. Another client, very similar type of vein, was following this arcane methodology, and as I preach, everything works better with trend. We had one of the greatest bear markets in history. He followed it down. He made a fortune, but unfortunately gave it all back up. So again, the early success or failure is a poor predictor of future success. The most successful traders, again, that I know are those who grind it out for a while and then slowly begin to realize there's no holy grail. There's no logic in this business. It's all based on emotions. They learn to read the emotions of the markets, and they learn to embrace their own, and longer term, they do just fine. And one reason for that, without getting too deep into that or too far sidetracked, is that their expectations are tempered. And when those really good times come along, they're like, okay, I know these are great times, but I know there's also going to be bad times. So I better make sure I continue to follow that money management, and I better not let my ego get the better of me. One thing that's hard to do because we don't like to play devil's advocate, we don't want to be a pessimist, but in this business you really have to. You need to seek to learn as much about what you don't know. And I think you're going to be pretty amazed, even 10, 20, or 30 years into this career, you're going to continue to learn things about the markets and yourself. And you'll reach a point where you actually know more than you think you know. And as I talked about in prior shows, when you first start trading, you know a lot less than you think you know. But once those two flip, that's when the true enlightenment begins to happen. So again, in peeling that trading onion, the trading thing looks easy. And we had this 30% tailwind behind us in the markets, and now it's getting a little bumpy. And I think it's safe to say that trading is hard. Don't feel lonely if you finally hit this spot where trading is hard. I can tell you it never gets easy, but it will get easier, especially if you are trading something simple, using proper money management, willing to embrace that the market is the final arbiter, our price is the final arbiter, and let things pan out. So again, we've kind of reached the psychology part of this, so we could spend many hours on each separate part of this. In fact, I started working on a psychology course a few years back, and I ended up with a 14-page to-do list. And then I actually ended up with 2 psychology courses from that, and there's still plenty more to cover. One's a holistic trader on my website, and the other one is mindset, the mindset course. So one thing I want to remind you of is that you're trading traders and not markets. You're trading the emotions of the other participants, as I described last week, and at the same time, you're embracing your own. And I hate to use negative words like take advantage, but that's what you're doing. You're taking advantage of the other people's emotions, provided that you can embrace your own. Now, I use the word embrace and not control because it's impossible to control or eliminate your emotions. And we'll get deeper into that further on. But if you had no emotions, you'd be dead in a day, because no action or any action that you take would not have a consequence. Now, the reason technical analysis works is because the market participants often behave in an irrational manner. I love many of the quotes from Yogi Berra, and one of his quotes is that if the world were perfect, it wouldn't be. Well, my corollary to that is that if the markets were perfect, they wouldn't be. If the markets wouldn't be an emotional being, then they would fail to exist. So one way to wrap my head around that is to become cognizant of your own emotions, okay? And that helps you wrap your head around the emotions of all the other market participants. So let's say you're in a nice trend and you get knocked out of that trend. Well, that's a pattern I call a trend knockout. You might feel like you want to jump back into that market should it begin to rally, okay? If you were a short and you shorted that top and you're immediately vindicated on a trend knockout, you're feeling pretty good. But if that market goes straight back up, you begin to get squeezed out. So the predicament of these traders can help to propel the market higher. If you wrap your head around your own emotions, you can begin to understand the emotions of the other market participants. Now, I just want to go back to the basics for a second, the utmost basics, and especially because a lot of people who have approached me lately, and I guess it's because of quarantine, the popularity of these trading apps on the phone, etc., and they try to explain why they want to buy a stock and how great the company is and all these other things. And I try to explain to them that you're trading traders, not markets, and all those other things that I preach about every day. But if you boil it down even further, a stock is a piece of paper that represents ownership in a company. That's what a stock is. And a company or a business is a person, partnership, or corporation engaged in commerce, manufacturing, or service. It is a profit-seeking enterprise or concern. So I think of a manufacturing plant. I think of, even if it's something intangible like insurance, you have people in a building providing that service. So it's something very tangible. Now, one is, again, very tangible, a physical entity, and the other one represents ownership in that physical entity. So this is what a stock looks like. Many of you probably have never seen an actual stock. In my old office, I had the wall decorated with quite a few of these. They could be quite beautiful. You could get them off of eBay pretty cheap. I bought probably 200 or 300 of them and sorted them through them and put the prettier ones up in my office. But that's what a stock looks like. And this is what a company looks like, okay? So again, more of a physical entity as opposed to a piece of paper. So a company is not a stock, and that's where people get really, really confused. This is what a company looks like again, and it is not equal to the stock. So a company may be doing great things and going great places in your opinion, but whatever the stock is worth is whatever the stock is worth. And a stock is not a company. So a company is not a stock is not a company. They're two completely different things. Now the stock represents ownership in the company, but it does not represent the company itself. The stock is worth what the other traders and investors claim that it's worth. So you might like and believe in a company. You might like these weed stocks. You might like Apple. You might like whatever stock it is. You might think airlines are low. And you might feel good about these things and feel like the stock is going great places and doing great things. The company is going great places and doing great things. But that's not a valid reason to buy the stock. There's only one reason you should ever buy a stock. Now, when I'm doing a seminar and I ask people why they trade or why they should buy a stock, I get a plethora of reasons, and I'm kind of shocked at the fact that the only reason, and that is to make money, is often down the pike, and sometimes I don't even get to that reason. That's the only reason to ever buy a stock. Now, why do people sell stocks? And this is something to help wrap your head around things. People sell stocks for a variety of reasons. You're getting a divorce, and your spouse had a very good divorce attorney, and they want half of your stuff, including your stocks. Somebody, God forbid, dies, and there's death and an estate settlement. The kid is old enough to go to college, and you need a little money because the kid is not as smart as you'd hoped he'd be. He didn't get that scholarship. He's been busy trading weed, smoking weed and trading weed stocks on his phone. Didn't get around to studying a whole lot. You're buying a house. You need some money for that down payment. Now, the point I'm trying to make here is that none of these reasons are reasons why people sell stocks. And right now, we can make the argument that, hey, somebody is possibly displaced thanks to this horrid disease that's out there, and they might need a little money, so they might have to sell some stocks. So the point I'm trying to get to is that none of these reasons have anything to do with the underlying company. And this line of reasoning comes from my good friend Dick Fruth from Fruth Capital Management over in Houston, Texas. We visited him about a year or so ago. Super nice guy. And his point is that years ago, or the story he backs us with is years ago, when he was a broker, people actually did not trust brokers very much, and they kept their stock shares in a safe deposit box or at home, and they would walk into the office and actually hand them over to a broker to sell them. And most of the brokers would just rip the shares out of their hands, give them a ticket of money, whatever. But Dick's a little bit more gregarious, and he would sit down and chat him up, and he would learn a lot about the person. This is where he soon discovered that people sell stocks for a variety of reasons that have nothing to do with the underlying stock or market. So again, just remember that people buy and sell stocks for a variety of reasons, many of which have absolutely nothing to do with the underlying market. I actually bought the domain, don't confuse issue with facts, because I think it's kind of funny. If you're going to be a trader, that's one of the better statements out there. So unless you're Bill Clinton, I don't know if you phone traders are old enough to know who Bill Clinton is, but he posed the question, what is, or what is. And unless you're Bill Clinton, what is. The price of the stock, the ask, is the lowest amount that someone will sell it to you, and the value of the stock, the bid, is whatever someone will pay you for that stock. Nothing more and nothing less. The company may be going great places and doing great things, but unless the price is moving higher as a trend trader, you should not be buying the stock. Now, in summary, you don't know what you don't know, but that's okay. As soon as you accept this fact, you're ready to become a trader for life and not just now. I'm very excited that all these people are coming into the market, all these new traders, and that's fantastic. But make sure you're a trader for life. I had a potential new client come in a few days ago. He stayed a day or two, and he looked at maybe 0.1% of the material that I had out there, and he didn't even look at my stock recommendations, and we actually had a really bang up day. So you need to take it seriously and make sure you're just not out there just poking around, but get deeply into how the markets work and what you might not know about the markets. And again, current success is a poor predictor of future success. I would much rather have someone who went through some tough times first, so their expectations will be tempered. A stock is not a company, and vice versa. A company is not a stock. Don't confuse the issue with facts, and that's a biggie, and I see this happen every day, all day in the markets. If the stock is going up and you're long, that's a good thing. If it's going down and you're long, that is a bad thing. Don't reason why the stock should stop going down. Have a stop in mind, an exit point that is, and get out if you are wrong. And by the way, let the market make that decision for you. Put in a stop and let the market take you out of your position. Right before I started recording this, I put in some hard stops. And if you hear a little alarm go off, that's me getting stopped out. And if you hear an F-bomb, that's me letting you know how I feel about that. But the bottom line is you have to have a place where you'll get out if you're wrong. Go in and watch the money management show that we did. And if you want to get deeper into it, go into the money management module on my website and learn about proper money management. And again, this is a biggie. We're trading traders, not markets. So hopefully everybody will embrace and accept all this, and we could get into deeper and deeper topics and get into more of the weeds on trading psychology, thinking about the markets, and then I could show you these patterns I've been showing you all along, such as the mystery charts, and how they pan out in real markets along with the money management. Well, I want to thank everybody for watching. I appreciate you taking time out of your busy schedule. Again, if you want the slides from this presentation along with the slides from all the other presentations which contain the setups and the money management, go to davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. Thanks again, everyone, and may the trend be with you.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.